Sometimes it's nice to flex, right? Last week I had a really good week. As I posted, making 10K in 1 week. Brilliant week. This week was good. It was decent, but I also had a losing day on Friday. It's the first day in a while where I've had 2 consecutive losses in a row. And my personal rules, based on my own data, my own historical performance, is that when I have 2 losses in a row, no matter what account it's on, my personal accounts, my prop accounts, I lock out completely for the day and walk away until the next day. So that's what happened for me yesterday. I had 2 losses on my personal account and I locked it up and walked away. So in this video, I'm going to share the losses, what we can learn from these losses, because there are a couple of good lessons in this as well. And all good and well to show the good side of trading and the winning times. But as much as it pains me to share this stuff at the same time, it is good to share these red days and the things that we do wrong as traders. So I took 2 trades. You can see them here on the chart. Let's run through them right from the very beginning. Most days I'm trading the overnight open now, which is from 6 p.m. Eastern time forward is when I'm sitting down and I'm trading. I'm trading the first couple hours of that overnight open. Following my usual process, first thing I have on the chart is the previous day's RTH profile. And you can see that's the profile here, volume profile in green. And what I do with that is I have my levels. We have the previous day's value area high, previous day's point of control, previous day's value area low. Second thing I'm doing when I'm coming into a trading day is my trading session is I have the current session volume profile. So if I'm trading overnight, I like to start my profile from 4 p.m. So after that main volume close from the regular trading hours. I draw that through. I have that click to extend right when I'm trading, so I don't have to keep dragging the profile, but I'll show you the profile at the time of my trade entries here, and let's run through both trades. So the first trade in here was actually a really good trade. I lost this trade for a very, very stupid reason, okay? And I'll run you through this right now. You can see I got in long with 6 contracts, adding in, as price pulled into this level. Now, why did I trade this level here? Well, first of all, we have the previous day's point of control across this point here. If you look at the profile here, you can see a very large cluster of volume right across here, what I call reinforcing these previous day levels. So I'm looking for price to treat this area as support. So as price pulls down into this point, which is also current session developing point of control. So I get my trade in as price pulls back to previous day's point of control into this high volume node. I get in long here, no problem, good entry. Now, according to my usual rules, I only scalp, alright? So I'm not really taking big positional moves. I'm looking for areas in price where I can find a nice, quick, high probability reaction for a nice, quick trade. In and out, and then I'm done for the day. So I look for about $1,000 on my personal account. I'm looking between $1,000 and $2,000 per day. So once I hit that $1,000 to $2,000, I close out and walk away for the day. So I actually had it, okay? The trade did cross plus $1,000. And I did something really, really greedy. And the reason I lost this trade was due to greed. So if my trade was here at 304, let's say 304.25, right, I had a really, really good entry, like almost bottom ticking that entry. So the entry is perfect, little to no drawdown. My stop loss is just below the value low of the current session. And I was initially just targeting the swing high here. I like to target local highs. What I mean by that is the most recent swing high or swing low before my entry. So in this case, I'm looking for a long. This is the most recent swing high. That was going to be a nice, easy 5 points, 6 contracts. It's over $1,000. That's $1,500, right? That would have hit $1,500, and I would have been walking away absolutely happy with that. But for some reason here, as price started to move up, it was moving up pretty quick. The momentum on the time and sales looked really nice. I was really happy with this. I thought, you know what? I'm going to push this out. And then, of course, the swing high also lines up with this sort of high volume node across here. So it was a good area to take profit if I actually did that. What happened is as we traded up towards this area, I was like, you know what? I'm going to target the value area high of the current session. So I pushed my take profit out. I was already up $1,500, okay? And I decided in this moment to push my take profit out just a little bit higher. I thought, surely just a couple of points more. The volatility's been good the last couple of weeks. I'm sure I can hit that value area high. So just for a little bit more money, I already had a guaranteed $1,500 trade, boom, right here initially. I decided to push that out and go for the value area high. And then look what happened. Price came back down closer to my entry. Fine, I held the trade, not too big of a deal. Then price pumped up. See this candle here, pumped up quite high. And look, 1, 2. That is 2 ticks away from filling my full take profit on this more greedy take profit target. It did that once, dropped. Teased by 2 ticks, it dropped all the way back down to my entry, but I still held, no problem. And then look what it did again. See this, this swing eye here? 1, 2. It's almost like the market was saying, Cammy, take your original take profit target. I'll give you a second chance. I'm going to blue balls you once. I'm going to blue balls you twice. There's 2 chances to get out of this trade with more than the initial profit you targeted. But it pulled it away from me. And then we had the 7 o'clock open. And as you can see, boom, stopped out. 7 o'clock open, that volume came in, came through, broke the level, and stopped me out immediately. So I had not only 1 opportunity, but 2, 3 opportunity, even 4 opportunities. There were many opportunities in here to get out of my trade at my initial take profit target here, which is over $1,000, $1,500. I could have closed up and walked away for the day and been up 1,500, which is, that's the usual type of day I'm looking for on my personal account. Just scalping that 1 to 2 grand and closing out. That first trade, really good trade, really nice setup, I should say. Excellent entry. Excellent stop loss placement. A good thing it didn't burn me much. I kept my stop loss right where it was, so I'm happy about that. Protected my downside. But my upside, I moved it. I could have had a really good trade and had a good day yesterday. Instead, I moved it and I got burned. I got taught a lesson there. The second trade now, you'll notice that after that stop out, we have a second trade. Now again, this second trade was a really good setup, okay? So if we pull that high volume node across and pull the profile out to the time of my second entry there, this is how the profile looked at my second entry. So what I'm looking at here is a normally an A+ setup. We have the previous day's value level or previous day's point of control on the charts, and then we have a high volume node developed directly on top of or directly adjacent to that previous day level, what I call a reinforced level. And I like to take, when we're looking at reinforced levels, one of my favorite trades to take is a break and a retest. So you can see that price broke down at 7 o'clock open. We broke down away from current session point of control, away from previous day's point of control, and away from this high volume node that reinforces this level. We broke away from it well and truly. We melted down. We came away from this node, came down, came back for a retest. What would normally be a retest, I got short, stop loss just above the node here, and I got stopped out pretty quickly. Price came right back up to the value high of the current session. So the second trade I wasn't too mad about, but here's what I did wrong. The setup was good. The setup was fine. It was really good. That is my A+ setup. The break and retest of a reinforced value level is my favorite trade to take. There are 2 things that happened here. Number 1, I was kind of pissed off from my mismanagement of the first trade. I was a little bit emotional. I was annoyed at myself and I was annoyed at the market. Annoyed at myself, I moved my take profit. Annoyed that the market teased me by 2 ticks. So I was frustrated. I came in only a couple of minutes after that failure of that first trade. I come in to get short. Okay, only a couple minutes after, I come in to attempt another trade. Now in the opposite direction, and that I missed a very key detail here. What I mean by missing a key detail is that had I been paying better attention to the development of the profile, notice how this profile has a pretty even distribution. We don't really have very significant levels. Even though this is a high volume node right across here, it's quite thick and it's pretty similar to the volume of these other nodes across here as well. We have quite an evenly distributed profile. And when you have an even distribution of the profile, instead of looking for breakouts in these type of shaped profiles, you instead want to be looking to fade the extremes, okay? And you can see that across this profile, the value area low is where you had your reversals. And before we got the breakout to the top here, if we keep pulling this profile across before the breakout, you can also see it here, how the value area highs, the upper extremes of the profile were where the rejection zones were too. Had I not been seeing red and wanting to jump into another trade to make up for the loss I just took, I may have paid better attention to the volume profile and see the type of shape I was dealing with. And not that I necessarily would have had to take a trade to jump in this to the upside, but perhaps I wouldn't have chosen to take a breakaway to the downside, seeing the type of profile we had and seeing we're trading at the value area lows in an even distribution. I can say in hindsight that that wouldn't have been a good short to take. So although the setup was good, I didn't pay attention to the profile conditions, didn't trade to the ranging conditions that we had here as evident on the profile. So I've been on a really hot streak lately, a really good green streak. Things have been going so well. The first day in a good while where I've had 2 consecutive stop outs, and it taught me 2 good lessons, all right? Don't be greedy. Stick to your plan about your take profit and your exit targets. And the second one, after you've taken a loss, take a little bit of extra time to have a breather, allow those emotions to pass so you can properly evaluate the markets and decide what you want to do next instead of quickly jumping into something else. So a couple of good lessons that I've learned in the past but have been reinforced again yesterday from these losing trades. But one positive thing about that red day is I completely followed my risk management rules. I didn't take any bigger stop losses than I needed to. My stop losses were nice, well managed, nice and tight, and I followed those to the T. So protecting my downside was good, but obviously there was a couple of things that I could have done better yesterday. So always lessons to be learned, no matter how far in your trading journey. The markets will never fail to teach you a lesson. So that was my end of week. Let me know in the comments below if you want to see more videos like this, and I'll see you guys next time.